Good afternoon. Time to have a look at market news. Well, looking at what happened on the Asian side of things, those markets mixed as investors digested China's inflation numbers. They roughly came in within expectation. But looking at how the markets are performing, or rather have performed throughout the day, with the Hang Seng Index up 0.7%, mainland Chinese markets finished a little bit lower, as well as the Nikkei in Japan down about 0.6%. As we move focus and look at what is happening in Europe, investors are digesting a slew of corporate numbers. Everyone is looking out for the U.S. consumer inflation figures, which are likely to give an indication as to where we're going, especially with the debate around inflation. Here's what the market is looking out for. The expectation is that we will get a reading of 0.6% versus the prior month, or a gain of around 6% year on year. When we look at core CPI, which excludes energy and food, and it happens to be the Fed's main gauge in terms of looking at inflation, it's their preferred measure of inflation. We are expecting it to have risen 0.4% versus the other expectations that have come out. So we will definitely be unpacking that as soon as those numbers come out, likely tomorrow in our markets interview. However, to talk to us about how all of this is playing out, we are joined by Chantal Marx from F&B Wealth and Investment. Chantal, thank you so much for your time. So we started off with inflation in China. Focus now shifts on to what we can expect for U.S. inflation. With all of that happening in the background, how is our market performing?
So our market is actually under pressure, but it started out quite strongly. I think what really spooked the market was Tencent's results that came out just before 11, where it showed that even though earnings beat expectations, revenue came under pressure. And as a result, we saw Naspers and Prosus come down. We also have resources under pressure, but surprisingly, financials are doing quite well. We also have the rand a little bit weaker, which is translating into a push higher for some sector heavyweights like Anheuser-Busch and British American Tobacco.
Right. So let's, delve in a little bit on those Tencent numbers. As you mentioned, most might not know, but Tencent, the world's biggest, rather largest video game developer, net profit coming in at $6.1 billion. Profit beat analyst expectations, but revenue fell short. Is this something that we can expect going forward? Is there an indication in those numbers that there might be a little bit more pressure going forward, especially as we look at what's happening from the regulatory side of things?
Yeah, and I think that's what the market is trying to kind of digest as well. So the earnings beat really was because of below the line items, as we call it. And that's typically upward valuations of some of the investments that they have and variations in disposals and the like. But if you look at the business at its core, that revenue miss was a real concern. I mean, these guys are not growing. They're not moving backwards. Just the pace of growth is coming off a little bit. Now, this could be once off and related to regulatory intervention, particularly on the gaming front, or it could signal a more permanent slowdown for that business.
Right. Locally, we did have news from Vodacom Group in the one aspect. They spoke about, Vodafone wanting to buy Vodafone Egypt, that is Vodacom looking to buy Vodafone Egypt for about 41 million rand. And then we also had the Vodacom Remgrow announcement. What did you make of that?
Yeah, Vodacom finally starting to move and shake a little bit. I know investors have been very frustrated with Vodacom as its growth profile has been quite pedestrian, particularly when compared with the likes of an MTN, where MTN has exposure to very exciting growth markets like Ghana and Nigeria. Vodacom's entry into Egypt, I think, is very positive. At least the market is saying it's positive because Vodacom is going to issue about 13% of share capital, but the share price is up. Which signals that the market really likes the deal. Egypt has a very large unbanked population, and the fintech side of Vodacom's business, I think, will be a particularly good fit there. Also, the opportunity in fiber is still quite substantial. Fiber is still in its infancy in South Africa, and we know that broadband penetration is still very low. So that capital injection and that tie-up with Vumatel and Dark Fiber Africa also very well received by the market.
Right. So let's move things stateside. Does it matter for you or for the market in terms of this race for the Fed chair, whether we have Fed Chair Jerome Powell or we have Fed Chair Lael Brainard?
It doesn't really matter to me. I don't think it should make a big difference. Both of these individuals are regarded as quite dovish, which means that they do prefer a looser monetary policy framework. It's all very complicated jargon, but in essence, their decision-making from a monetary policy perspective should be pretty much the same. The only difference, and I think that that's what the market is a little bit concerned about, is that the candidate being interviewed for Powell's job, she tends to be more weighted towards a more strict regulatory environment, whereas Chair Powell, being a Republican as well, is really supportive of a more loose regulatory environment. Markets don't like regulation, and I think that that's why the market is responding to it. All in all, though, from a monetary policy perspective, I really do not see a big difference between these two individuals.
All right, tomorrow our focus shifts, at least from the economic side, on the medium-term budget policy statement and new Finance Minister Enoch Godongwana. What will you be looking out for?
Implementation, right? So, I mean, at this point, you would want to start seeing government really tooting its own horn when it comes to implementation of structural reforms or what they've already achieved. And then perhaps plans in terms of how they are planning to support the achievement of further structural reforms going forward. We would also like to have a bit more clarity in terms of what the expectations are for the full year now that we are seeing quite a nice revenue overshoot, and also how government will apply that revenue overshoot. There would be an expectation that some of that revenue overshoot would be used to reduce debt, but also I think it's quite important from a South African perspective, both from a societal and an economic growth perspective, that some of those proceeds also go into support for the economy and support for consumers in the wake of COVID-19. Not much will probably be said in terms of changing any policies or changing anything related to the tax regime right now, but there could be clues as to what's to come in the Feb budget. I do think, however, that this budget's going to be mostly about the new finance minister finding his feet and perhaps just reiterating some of the rhetoric that came from Finance Minister Mboweni, just to ensure that investors are comfortable with continuity.
All right, Chantal, thank you so much for your time. That is Chantal Marx from FNB Wealth and Investment. We're going to take a quick break, and when we come back, we'll have more news for you.